Now, ladies and gentlemen, we're going to do the Accessing North American Markets and Investors, also known in my book as cross-border transactions. I'm going to introduce Margaret Rosenfeld of K&L Gates. When I think of K&L Gates, I think they have an office in every city in the world. When I think of Margaret Rosenfeld, I think of a lawyer who's done most transactions possible in the securities world. So without any further, I will introduce Margaret Rosenfeld.
Thank you, Shelley, and thanks to Planet MicroCap and Stock News Now for putting together this wonderful conference yet again. And Bobby has done a fantastic job really organizing a lot this year. This is my first time attempting to use electronics as I run a panel. So if we have any glitches, I will blame it on the tech people. How many people in the room are with non-US companies or non-US funds or outside the US? Okay, yeah, quite a lot. And how many in the other group are working with people outside of the United States? Okay, so the purpose of today's panel is to talk a little bit about how to access the North American markets, and primarily Canada and the markets in the United States. Let me introduce a few of the folks on the panel to you. I'll not introduce one, no. I'll introduce all of them. I'm going to start at this end with Andy Kyzyk, and he is an SVP with the OTC, and he's head of advisor relations there. He brings about 20 years of experience in the global markets and a great bit of diversity. He was at Goldman Sachs for a number of years in their equity division. He also really headed up their ADR, or American Depository Receipts program, which is one way that a lot of non-US companies access the markets in the United States. He also was a managing director for the New York Stock Exchange, working for Europe, Middle East, and Asia. And I believe you headed up the London office for some time for them. So he's worked with, at that point, with more than 85 issuers from 17 different countries. He's one of the most recognized experts on Reg A plus IPOs. And right now, his major focus is the, I shouldn't say the development anymore, but sort of the expansion of the OTC QX best market. Next to him is Richie Friedman with SheppardMullin. We get applause. Andy, you didn't get any applause. I'm sorry. But,
they'll come later, right? Thank you.
We'll plant some people in the audience next time for you. Richie has done a good job planting some people in the audience. I've known Richie for some years. He's a partner at SheppardMullin, which is a full-service Global 100 law firm. And Richie is based out of New York. He has more than 30 years of securities law experience, representing private and public companies on corporate as well as securities matters. If there's a financing, he's done it. IPO, registered direct, reverse mergers, pipes, shelf offerings, one of the people that you can feel very comfortable with in doing financings. Brady Fletcher in the middle. Brady is the head of the TSX Venture Exchange at the TMX Group in Canada. And he's going to tell you a lot about that exchange, which has a venture focus. And he also has a really unique background that I think helps with being the head of the TSX Venture Exchange. First, his most recent past life, he ran an advisory practice for companies on corporate strategy, M&A, and financing and new business development. And then he also has himself been the CEO of a tech company for a social CRM platform focused on retailers, primarily in the hospitality space. Is that right?
That's right.
So I think that's a really great background to be leading an exchange focused on the venture area. Lou, whose name I will not slaughter this time. I always slaughter you. Bevilacqua. Ooh. Lou. I think Lou and I have done about 5 or 6 panels together over the years. I always slaughter his name. Lou operates a boutique transaction, corporate, and securities law firm. He comes from a big law background, and so he does a lot of big law work. He works with companies listed on New York and NASDAQ Stock Exchange. He also works with companies doing crowdfunding, Reg CF, Reg A+, private placements, and venture capital, equity, and debt. he does a lot of work internationally, has a lot of experience with China in particular. And then finally, Edric. I'm going to mess up Edric's name, of course. He is with Univest Securities, and Univest is a U.S. broker-dealer. You probably know them for doing the first IPO biotech in the U.S. this year, 2019. He's going to tell us a little bit about that. They focus on in a niche area. Most of the retail investors they deal with are American Chinese and private wealth from Asia Pacific. Prior to Univest, Edric worked as a VP at Warner Technology Investments and Buckman. And he's going to talk to us a lot about the different investments we're seeing out of China occurring into U.S. companies, as well as Chinese companies coming into the U.S. For financing. So we got a great background. We have a short time. The reason I spent a little time on their background is that so after this panel, you can come up and talk to these folks and ask them the questions that you need to ask, because knowing their background, we've got a great global cast here of people who are used to dealing with non-U.S. companies trying to access the North American markets, or U.S. companies trying to access foreign investors or foreign markets as well. So I'm going to start with Brady. Tell us a little bit, I kind of previewed a little bit about the TSX, but tell us about why is it a little unique in exchanges out there right now?
Yeah, it's an interesting story, and it's exciting to be down here with this group. Shelley, Robbie, great job putting this thing on again, and good to see an expansion in the group that's here. The Venture Exchange is actually a globally unique platform, and over the years we've seen different markets, London's AIM market, we've seen the ASX try to replicate it, and it's really that our entire history in Canada has been backing generally junior resource companies, but putting risk capital to work through the public markets in what was really the original version of crowdfunding. In order to access the crowd or the Canadian retail, you just had to get a listing on the Canadian markets, and then you found a broker who managed a couple hundred accounts, and if the broker liked your story, then he would go out and sell that to all of his clients. And that was how, the likes of all the junior mining companies got started in Canada, and that's why Canada is today home to 50% of the world's mining companies for listings.
What's the trading like on the market? Is it mostly Canadian, or what's the percent, would you say, of non-Canadian?
We've done the analysis, and it's roughly 40% of the daily trading activity comes from outside of Canada. 25% of the member firms that trade on our two exchanges, the TSX and the TSX Venture, are headquartered outside of Canada, and most of them are all the U.S. dealers as well. So we get a ton of that activity coming up to Canada, and it is to participate in what we view as public venture capital. And one of the most exciting things that we're looking at right now, and we're seeing this trend, is the adoption of programs like the Capital Pool Company. And so the Capital Pool Company program was something that was started originally to facilitate junior resource companies coming to market easily and efficiently. We're now seeing U.S. founders putting CPCs together, and my partner Delilah's in the audience to talk about that as well with anybody. We're seeing U.S. founders putting CPCs together, Israeli CPC founders coming together, bringing companies from Israel to list in Canada, from the U.S. tech companies coming up, and those structures have been well evolved in Canada over the last decades.
So, and I know some of you are probably going CPCs, what are those? And there's also RTOs, which is another thing that Brady and Delilah can talk about. They have in the sponsor room a table.
Yep.
They have handouts with this information, so please, if you want more information on that, check out their table. Andy, so kind of complimentary within the United States. Tell us a bit about what you've been doing with the QTC QX.
Sure.
And you call it the slow peel process
Slow peel.
sometimes.
So OTC markets, our mission is pretty much to create better informed and more efficient markets. We operate OTC QX, which is our best market, which has compliance and financial standards. We've got OTC QB, which has compliance standards. It's a venture market, and then there's Pink Open Market. And what we base all of our, we base everything on disclosure and verifiable information. So what's really keen is that we trade 10,000 companies. We're about 14 trillion market cap in total. It's about 30% larger than NASDAQ. And I think that if you kind of look at the dollar volume traded, the dollar volume traded by international companies makes up about 84% of our turnover, okay? So we have approximately 580 Australian companies, 2,000 Canadian companies, because the access into the U.S. markets basically defers to the home country practice. So if you're reporting on the ASX or Toronto, it's very easy to facilitate a quote and have a quotation in a market in the US. And the way I look at it is it's not to compete with foreign markets, it's simply to create a gateway to allow for those companies to come into the local market. And I think two key points out of that is the process of accessing that market is very simple. And the slow PO process is really designed that if you have publicly available accounts, those can be sponsored by a US broker-dealer. And that broker-dealer files for permission to trade, and you now have a market. Two things that are unique is Canada is a direct listing process, and also Australia can be a direct listing process or a depository receipt. And the direct listing process is gaining a lot of momentum because you're seeing the whole book. And you can trade in local currency. So I think that, accessing the market is really, we did a study in 2014 and 2016 on stocks traded between 2014 and 2016. And the three takeaways were that U.S. ownership increased by 7 times into the local market. Local trading in the local market increased by 28%, and OTC trading increased by 34%, because you're exporting coordinated information, which is corporate disclosure, to the American investment community, which is half the money in the world. So the lights are turned on. So I'll get into less later, but more details. But the point is that it's a no-brainer for non-U.S. companies to have a facilitated secondary quote in the U.S. to get access to the U.S. markets.
All right, so Richie, you work with these exchanges a lot from the legal perspective. And what do you think, what would you say are the main questions that you ask a non-U.S. company when they talk to you about, should I come in? We're listed in Australia. And someone told me I should get quoted on OTC or the TSX, or how hard is this process? What do I need to know?
So I probably see it a little bit more coming from the TSX than Australia.
Mm-hmm.
I just haven't had as much experience, but certainly we get exposed to companies that are already trading on TSX that want to come here and list through the DAD-PAL process. It's pretty seamless. And so if you're listed on a Canadian exchange that's a recognized exchange for OTC, we're kind of a bridge. We can walk them in. We help them with their application. We have to expose them to what it is they need to do, which is get their exchange application together, have a DAD or PAL sponsor them, find a market maker, and then most importantly, get DTC eligibility. Because at the end of the day, what is it that they want is what I'm asking them. Are they coming here for trading to get listed because they think people are all of a sudden going to trade their stock? Or are they coming here to trade and possibly raise money and access capital markets? And so I've seen it both ways, where these days it comes differently, not just from TSX. I see companies from the US because of cannabis and what's going on now, companies from the US that are now looking to Canada, to the CSE. Companies from TSX where you say traditionally you've been the junior mining, and you talked about CPCs, and by the way, CPCs are sort of, in my mind, like SPACs, just a different version of it in Canada, just for who's interested. But I see biotechs now, where traditionally, based in Toronto, you never saw that so much. It was all mining companies, but literally I've done 2 DAD-PAL applications for biotechs that are based in Toronto that have wanted to come here and list and access capital markets here. And so I think we're sort of a bridge now between the Canadian markets and the US, and it's going both ways, where early in my career I learned about a lot of local Toronto or Ontario-based companies that were low PE values, and they could come to US and go public and get higher dollars on their margin. Now I see something different, which is US company, and they wanted to be a foreign private issuer, or they were a foreign private issuer and wanted to be listed here. Now I have US companies that want to go list in Canada, raise money, and not have to report in the US and be a foreign private issuer. The world's turned upside down and money's flowing both ways, is what I think I see.
Yes. So yeah, a question that I often get asked is, what exchange should I choose? Because I think there was someone on the prior panel who has operations in Australia and America, and so you say, well, where should I list? So we get asked that question a lot. Where should we go out?
Part of the question is exactly what you said, which is there's different levels of the OTC, and there's ways to come here and fully report, or ways to come here and not report as much, or just report through the OTC website. So there's some very large companies based in Europe that come here and list that may not be SEC reporting, but have list on the highest exchange on the OTC markets. On top of that, just mention this because I think it is a bridge that people aren't focusing on, is the Reg A. I know we talked about Reg A when it was changed and whatever, but Reg A is available not to just U.S. companies, but Canadian companies. And the big plus that I don't think anybody's focused on yet is Reg A Tier 2. It basically gets you 50-state blue sky. And so used to do small IPOs or secondary offerings of OTC companies, and unless they blue skied every state, you couldn't offer your securities. You do an S1, you'd do like the 8 states where maybe you could register, and that's all you could sell to. Now, if you do a Reg A, you might get 50-state blue sky and be able to offer your securities everywhere and still be on the OTC, which I think is an important thing for people to explore.
Yeah. And just a very clear point on Reg A, you do need to be a U.S. or a Canadian company
Correct.
to avail yourself. So if you're not one of those, that's out of your toolkit. But I think Richie brings up a lot of good points, which is there are a lot of things in your toolkit to access the markets in North America. And Lou, you've been using that toolkit for many years. So tell me a little bit about what are the trends that you're seeing for, and I always say non-U.S. companies because we call non-U.S. companies that are entering the markets, there's a legal term, foreign private issuers, and I hate that because that term, because in my mind, you're not foreign, you're outside the U.S. But there's a term called foreign private issuer that Richie just mentioned. What does a company need to understand about that? What advantages does it give them if they fall into that status?
Yeah, sure. So I think first I want to put I want to put a finer point on what Rich, for some reason I can't call him Richie, and Andy were talking about. If you're on, for example, TSX Venture, which is a qualified exchange, actually OTC Markets has a list on their website of all the different qualified exchanges. If you're trading on one of these exchanges and you're reporting already on one of these exchanges, it's really easy to come and get listed or quoted on the OTC market. Basically, there's this rule 12G3-2B, which I think came out in 2008, and basically, without having to register, so you don't have to file SEC reports in the U.S., you don't have to file a registration statement in the U.S., you just have to continue filing under your home country rules. You have to publish some of that information in English, but you can apply and become quoted on the OTC for very low cost and very quickly. The one thing you do have to do is, as Rich said, have a market maker file a 211 application, which I used to say probably takes 3 to 4 weeks, but now FINRA is a bit dysfunctional, so it takes a lot longer, and nobody wants to, really wants to, there are no market makers willing to do these 211 applications. There are fewer and fewer. Andy actually wrote a great, I don't know if it was an article or something he filed with the SEC where he said OTC markets should be able to do that, and market makers should be able to be compensated, which I totally agree with.
And we all agree.
But it's actually a really easy process. So if you're a company that's listed on a foreign exchange and you want to create more liquidity in your stock, you want to have more U.S. investors, and you're a foreign private issuer, it's definitely something worth looking into. The other area I could talk about in terms of financing, we do a lot of work in China. We take China-based companies public in the U.S., and we've seen, we went through back in, from 2004 to 2011, we went through the whole reverse merger thing, and that ended up badly. It started out great. But now these companies are coming back, and we're seeing better quality companies. They're going public through initial public offerings. And I would say most, if not all, of the capital is actually coming from China. They want to get the exchange listing. These just seem to be higher quality deals, better due diligence being done. And so it's definitely a trend we're seeing. There are also, most of the companies that are coming in from foreign jurisdictions that are foreign private issuers, if they're other than Canadian companies, but they'll file a 20F with the SEC, and they'll become a foreign private issuer. And their reporting is much less than if you're a regular issuer. So you file they'll file an F1, and then they'll file an annual report on 20F, and they file 6Ks, but they don't have to file quarterly information, although most of them do under cover of 6K. So the reporting requirements are a lot easier than a standard reporting company. I think it helps a lot.
Yeah,
They're not subject to
one thing to
Section
note
14
on, so we talk about foreign private issuers. Don't assume just because you're outside the U.S. you fall into that category. Of course, it's a complex test that any of the lawyers on this panel, including myself, could help you with. So don't assume that just because you're outside the U.S. that you fit into that exemption. And then the other thing is make sure you contact and have an accountant who is really familiar with cross-border accounting. For example, with a 20F, you have to have your audit fall under PCAOB standards. So you might have to do some things with your financial statements. So disclosure standards, yes, they're definitely less, but a lot of people trip up with the financial statements by the time they reach us, and we say, yeah, we gotta get you in touch with the right folks. Rich, do you want to add something?
No, I think you hit on it, which is the financial statement question. And the stuff about China, it has changed greatly. And there are a few underwriters that do some of what you'd think are some of the smaller deals left, but most of the deals you see coming from China are much larger at this point. They really are.
We did a lot of work back in,
Okay, speak in the mic.
we did a lot of work back in the reverse merger heyday, and the companies just seem to be much better quality now.
Well, that's a good segue to Edric. So you worked on the first biotech IPO this year on NASDAQ, and and this was not a non-U.S. company, but you did access a lot of money outside the U.S. for it. But also, I had asked you a question earlier when we were talking. A lot of investment bankers say, "Oh, before you have an IPO, you have to have an institutional investor on your cap table. So don't come to me unless you've got, an institutional investor there." So tell me, you have a different viewpoint on that a little bit from your experience.
Yeah, so I guess if we wanted to talk about the, getting access to the North American markets, we have to attack from the point of view of we have a diversity of investors and market components in the space, and it's so diverse, it makes the American markets one of the best markets in the world. Along with the Canadian markets, we have different selections on the exchange side, so along with different selections on the service providers. And then every investment bank, in my opinion, has different strength, right? And ours is niche in the sense that we have a very unique distribution. Our clientele are mostly American Chinese, and also we are particularly very in-depth with the Asian Pacific institutions. So the way we did, the IPO this year is called ImmuBio. It's one of the San Diego-based immunotherapy companies we brought public. We raised about $9 million. And we took the company, remember this company has 0% of Chinese in it. This is a 100% US run and owned management team. We took them back to Asian Pacific, did the 15 cities roadshow, and we were able to get the deals done. And the shares are trading above the IPO, which is great. So, and to your second question, in our opinion, we only look at the quality of the company, the quality of the management, and the quality of the technology. We believe, there are every company is in a different situation when it comes to us, and we believe there are management that are very market savvy and has experience in managing public companies before, which make them don't need the guidance from other VCs and PEs, which a lot of times they don't like that model. So if we are comfortable with the management and their technology, we don't really care if there's an institutional investor in it or not. We prefer there is. But like this case, there's we did the deal 100% retail with quality investors, sticky money in it, the way we like to call it, and that's rare to find. So I guess Univest, our team is we're about 40 people, and we're young, but very scrappy team. We really went out our way to get this deal done, and we're looking to do the same for other issuers around the world.
Brady, you want to add something?
Yeah, no, I was just going to say it's interesting because you talk about the strength of the management team and how if you can bet on a solid management team, then you don't need to have the institutional backer as that lead order. And I think it's a really interesting segue into some of the reverse merger discussion that we were just having as well, because the strength of the Canadian reverse merger structure, and specifically the Capital Pool Company program, is that it is your ability to find a vehicle that has that public company experience. If you're a technology startup entrepreneur and it's your first time running a public company, it's your ability to partner with a group that understands how capital markets work, to partner with a group that can bring that capital to bear on you, and then ultimately have an efficient, streamlined process to bring the company public. Mm-hmm. So it's, when you talk about venture stage investing and getting involved in crowdfunding stories, being able to bet on a management team that understands what public markets are and understands how to structure some liquidity into it is really compelling.
So Andy, are you seeing, so SPACs are the equivalent of the pooled
Yeah.
in
Yeah.
the U.S. Are you seeing a lot of that with the
We've
OTC
seen a
right
lot,
now?
and I just want to make a comment to what Brady's talking about, is that once they successfully complete that process, the gateway of going from Canada to the U.S. is virtually seamless. So creating a facilitated quote into the U.S., trading a foreign ordinary share becomes virtually easy. To the point made earlier about getting 211s filed, it's an arduous process. But once you have home country corporate governance in place, such as the TMX requirements or TSX-V, or other markets as the Australian, the NSX, you really get an accelerated process to review the 211 because then there's something to fall back on into a qualified foreign market. So it accelerates the process to get quoted. So to Brady's point is that, yeah, you can all of a sudden piggyback off that and then get access into the U.S. market at a very low cost and efficiently into our space. In terms of pipes and SPACs and all kinds of financings, you can't do a traditional initial public offering on OTC markets because the shares would have to then be registered with the Securities and Exchange Commission. So you can't do a traditional IPO in the sense that we're discussing here that you could do a NASDAQ or New York Stock Exchange. But there's a lot of private placements that occur. Coming off the private placements, typically, there's a process to repatriate those shares into the market. We've got a lot of good process going on compliance levels to make that seamless into the space. We do hear a lot of issues around, I can't deposit my shares, I can't get them quoted. All those bits and pieces are getting cleaned up. There's one major point on our upper markets of QB and QX. They're considered to be established public markets, so they have a higher standard. And the higher standard is they qualify for the no penny stock rule. And the no penny stock rule isn't just a $5 stock. There's a net tangible asset test, there's a revenue test, there's a market cap test, and it's one or the other of those. And then we have an independent review of audit committee, free float component. So what you do is you're establishing a really good process or runway. With the financings that we see coming in, we're seeing a lot more financings coming in to SPAC type financing into our space. And we review every one on an individual basis. Statistically, we really create a facilitated secondary quote. And for foreign companies, I don't see that much, but for some we do. Is that fair enough?
Yeah, and you touched a little bit on having a broker who you can make sure can actually clear the trade or bring the stock in. So when you're a private company and you're coming in with all those shares that you privately place, there's something that they're gonna look at called Know Your Customer, or KYC, or an anti-money laundering, or AML. So we call it KYC AML for short. It's not just U.S., it's global, and every jurisdiction has different rules about it. But what are you guys seeing in that space right
This
now?
is a really hot topic because all I hear from everybody is you're the pink sheets, I can't deposit my shares. Okay, well, let me tell you how you can do this, okay? The reality is that you've got to think through on the repatriation process if you do privates or do complicated reverse mergers. The general suggestion is to work with a broker who can actually process that, because I see this all the time. Some dentist from New Jersey calls me and says, I bought 1 million shares and I can't deposit them. I'm like, well, why did you buy 1 million shares without the ability to deposit those shares? The typical process requires opinion letters on the original tranche, on the transfer. Transfer agents are involved very deeply in terms of getting comfort to be able to release those shares. I don't want to advise, but I would strongly suggest to work with a broker-dealer, because non-brokered private placements get really ugly really fast. Mm-hmm. And once the lawyer's out of the way and you resell those shares into the secondary market, those guys are stuck. Typically, there are solutions for that. I've worked with Fidelity. Fidelity, if you're a known customer and you have an account, they will accommodate you. If you're a Vanguard customer, they'll accommodate you. But don't come knocking on their door with 1 million shares, I want to drop this in the box, and then, before the share even trades, you want to sell out. I mean, that's typically your process.
Yeah. Okay, and
I'm happy to talk
We've got some
offline
horror
about that.
stories
It's a red flag.
that we might hear here, but Lou, go.
I just wanted to
Yeah. Yes.
I just wanted to add one point to that. I mean, the same thing happens in the Regulation A offerings, where people are, spending maybe only $100 to buy stock, and then they go to try to deposit it. It's free trading stock, and they find out that it's going to cost them $1,200 because the clearing firm can't rely on an opinion from a lawyer because of a 2009 FINRA notice to members. And so now the clearing firm has to do all this due diligence. So the guy gets a questionnaire this big. He's got to fill that out, and then he's got to pay $1,200 for his $200 worth of stock. So obviously doesn't make sense. There are some clearing firms like Folio, who you may have heard of, and there are different broker-dealers that clear through Folio, like Cambria Capital and TriPoint. And if one of those broker-dealers do the Reg A offering, then the stock actually gets deposited directly into the brokerage account, and so it solves that whole problem. So it's definitely an issue you want to think about, and hopefully it'll be solved in the near future because it is a big problem.
Yeah, and Edric, you're a broker-dealer. I spent a lot of time giving those legal opinions and tracing back the history of shares. I once had to I represented a 100-year-old community bank and had to trace back 100 years of stock and the history of it. So talk a little bit about what a broker-dealer does to make sure you don't have to worry about this up front.
So just from an operational point of view and the risk-reward kind of ratio to a broker-dealer, it just doesn't add up, especially when it comes to a Reg A Plus and 300 shareholders coming from China, and most of the names that the broker on the book cannot even pronounce. So there's absolutely no way to do proper KYC or AML except to have a system in place. So I guess what Lou was referring to this particular clearing firm is that they have the system in place to check these investors with the data, with the database that can back it up, right? So that takes a lot of the risk away from the operational side of things from a broker-dealer. But again, if it's our client and we did a private placement, we wanted to make sure that the shares are deposited with the transfer agent electronically, and we work with the attorneys representing the company to get our shareholders the right opinions that they needed, and we'll make sure that these shares go into their accounts at Univest.
Okay, so I think we're going to take questions.
Richard Redlands from First AU. I was interested in what you said about the Reg A offerings. I understand that there's a difference with Reg D offerings, that you don't necessarily have to be US-based or Canadian-based to participate in a Reg D. And if you, as a foreign issuer, if you do, what are the blue sky compliance matters that attach to that?
Well, for a Reg D offering, you mean? Well, Reg D, you're exempt from Blue Sky, but you may have to make notice filings. So basically, under Reg D, you'd file a Form D with the SEC within 15 days of your initial closing. And then different states have different notice requirements. So you'd have to figure out what states you've sold in, and sometimes you just have to file a simple notice and maybe pay $300. Other times you might be exempt altogether. You just put a memo to file explaining why you're exempt. So it kind of depends on the state. There is a system that, I forget what it's called, maybe Margaret remembers, where you can do the Blue Sky. It's a site, and it covers, like, I don't know, 20-something states. So that's great. If it's one of those states, you just do it, and you pay the fee, but it's a lot easier. And then other states, you have to send stuff in manually. So it just depends.
Yeah, and I would say most non-U.S. companies that are using Regulation D tend to be focused on one or two states. So that there is a 20-state system, but it can get a little expensive, and sometimes the filings are messed up that they do. And there are a lot of exemptions, and they make you do filings when you didn't have to, I have discovered. So if you're just typically, in my experience, the non-U.S. issuer, you end up with some states, one or two states, so it's easier to do that. And also remember, Reg D is a private placement. Reg A is a public offering. So that means that the shares that you're selling to those U.S.-based investors are restricted. So, and typically it will be a 1-year restriction before they can be transferred, unless there's another exemption.
And add that you generally in a Reg D are probably selling to accredited investors only. If you want to sell to non-accredited, you may be able to, but then you're going to have a bigger disclosure requirement, including financial information. And so if you're public on Australia and already file, it may not be that hard to do, but it's just extra requirements.
And Reg A Plus is only eligible for Canadian or U.S. issuers, And just for clarification, Blue Sky exemption really allows for a broker to recommend, solicit, or advise those shares to a non-accredited investor. So basically, it could be used as a marketing and advisory tool for that. Okay.
Okay.
Mike McMullen, Chief Financial Officer of QS Energy. We are an OTC OTC QB company, and we have a large number of investors out of Australia, and we have a number of Canadian companies that are very interested in our technology. It's a crude oil technology. We expect to see a lot of business out of Canada. I'm curious about any benefits of looking to list on a Canadian or Australian exchange.
Sure. So I guess I'll start that one off. Just looking at what we have in Canada, because we've been so resource focused, there is just a depth of experience that you'll see the investment community has. You'll also find that the dealer community has more of an appetite for backing companies that are in that growth phase, and that's something that we think is actually globally unique. When you look at the companies that grow in Australia, quite often what happens is they get up, they do their 10-cent round, and then they're trying to figure out how to get over to Canada, where the independent dealer community is active and supports those issuers. The other thing that you'll find is that by trading in Canada, we're on the same time zone as New York. And so every single U.S. family office, qualified institutional buyer, most of the accredited investors, whether they do it through OTC or they trade directly, they have a way to trade Canadian names. And even the likes of Canaccord Genuity, our largest independent dealer, have offices across the U.S. and do those roadshows down into the U.S. to help companies get exposure down here. And I think there's something about sharing that longest border in the world that does, give certain benefits to companies that elect to list in Canada and take advantage of a little bit of a lighter touch regulatory regime, access public venture capital, and then grow. With your Australian shareholders that are existing there, I think you might want to look at an ASX dual list. But that's just a question of how do you access capital and where's the best place for them to get liquidity. Yeah. We've got lots of companies dual listed between the two markets.
Well, one of the things that we were going to kind of wrap up with was what are the systems seen in terms of digital securities in the future? So are we moving towards tokenization on any of these exchanges, and what are the activities that we're seeing in those areas?
Just really quickly in 2 seconds, we trade legal securities through our regulated broker-dealer. But what happened was when we created GBTC, which is a Bitcoin trust, it gives you exposure to an alternative investment. So at the moment, the process right now is how do you actually create securities that can actually be clearing the SEC threshold, okay? Because there's a Howey test. I won't get into the details of the Howey test, but basically, you can't just create a coin and trade it because there's broker-dealer rules in place that are regulated through FINRA to market securities. We're constantly on the edge with this with a lot of companies and trying to find alternative investments. We're keen at the top of the charts. We work with every single broker-dealer on figuring out a way, but the problems where they get stuck is in compliance at the broker-dealer. How do you actually facilitate and meet FINRA rules to do it? So I think that for the moment, that's about where we are. We talk to a lot of people about having connectivity, walled-off gardens, and how to create the technology so they can talk to each other. Kind of sounds like the consolidated tape that we have in America. And then one of the bigger issues always comes down to custody and clearing. And how can that work? In the real world, people lose their keys. And I think one of the challenges is that you can call your TA and say, how do I get this? So there's still a lot of hurdles to overcome. But I'm happy to talk to people afterwards about how GBTC was organized and structured in the Ethereum Classic Trust and others with Grayscale, and how we kind of got around that with the SEC. Thanks.
Yeah.
Brady, what's Canada doing in this front?
Well, I mean, at TMX, we've been leading the charge on a number of different initiatives. We had Jasper, which went through phase 3 last year and demonstrated the ability to settle on a cryptocurrency to settle transactions. The challenge is that we haven't seen the ROI for it. The reality of the computational complexity that goes into blockchain-based transactions is that it's really good when you're in a non-trusted environment, like if you're trying to track gold coming out of the ground in a developing nation through shipping and then through processing and then actually into a vault and make sure that that's conflict-free. But when you're dealing with a central depository for securities and one trusted intermediary that all of the banks tie into, then you don't have that same untrusted environment. You've got a pretty trustworthy environment, and the real reason that anybody goes public isn't because you need to be able to have T0 settlement. You go public because you're trying to get access to $200 trillion of global equity capital markets. And when you look at those numbers, $200 trillion relative to $200 billion that are in cryptocurrencies, if you're trying to build a company, you need to find the deepest pool of capital that will trade your securities and that will finance the growth of your business. And that's just not in cryptocurrencies and digital assets. We have evolved over the years as capital markets. TSX itself has 166 years of history that started out with a handful of guys in a paper ledger, and then that evolved into trading floors, and from trading floors it went to felt boards and chalkboards, and eventually you got a vault, and then the vault was filled with paper, and now today that vault is 99.9% dematerialized, i.e. it is digital ledger. The ledger is just centralized at one place called CDS in Canada. And then CDS talks to the node of DTCC to facilitate trading between the US and Canada. And it's already digital. But the secret sauce
So I have
is,
to insert here, since everyone knows I've got a bit of tech background, it's electronic, it's not digital. And we can
not
debate
on the
that.
blockchain.
But, yes, but we can argue that later. Okay. Well, I think, do we have to wrap up our panel? Yes, so we have to wrap up our panel, and we can have some cocktails and argue about blockchain and digital versus electronic. Thank you, everyone. They're all available for questions afterwards, and I have a lot of materials on these topics that they can provide to you.
thanks.